It's 7:42 a.m. You've just poured your first cup of coffee. The headlines scream, recession fears loom, S&P 500 hits record high, banks slash savings interest rates again. Confused yet? So was I. In 2025, the average person doesn't just battle inflation or layoffs, they battle indecision. Should you save? Should you invest? What if you make the wrong move? Because one mistake could mean working 10 years longer. One smart choice could buy you a decade of freedom. And that's the modern dilemma. To save or to invest? Which one builds the life you actually want? Let's say you have $1,000. Option 1, savings. You park it in a savings account, safe, predictable, accessible, but the average APY in 2025? Around 1.5% if you're lucky. After a year, your $1,000 becomes $1,015. Meanwhile, inflation, currently sitting near 3.2%, quietly eats that increase alive. So while your bank balance grew, your purchasing power shrank. Option 2, investing. You put that $1,000 into a low-cost S&P 500 ETF. Yes, it comes with risk, but average annual returns hover around 7 to 10% long-term. Your $1,000 could become $1,100 or $1,200, maybe more, maybe less. But unlike savings, investing gives your money momentum. Now multiply that $1,000 by 12 months, or 10 years. You start to see the gap. Here's the real question. Which future would your future self thank you for? In the past, the advice was simple. Save 3 to 6 months of expenses, then invest the rest. But in 2025, the rules have evolved. Rising rent, layoffs in tech, volatile markets. Liquidity matters more than ever. So before you even think about investing, ask yourself, do you have an emergency fund? Do you carry high-interest debt, like credit cards? Would you need this money back in the next 6 to 12 months? If you answered yes to any of those, save first. Because investing before building a safety net is like sailing in a storm without a life jacket. And here's the nuance. In 2025, the bare minimum emergency fund isn't $1,000. It's 1 month of real expenses, rent, groceries, bills, your survival stack. Once you've got that, then, and only then, you step into the world of investing. Here's the truth no influencer wants to tell you. Saving doesn't make you rich, but not saving can make you broke. The best strategy isn't either or, it's sequencing. Here's a 2025 friendly roadmap. Build your emergency fund, 3 to 6 months of expenses. Use a high-yield savings account. Pay off bad debt. Anything over 7% interest should go before the market. Start investing. Begin with index funds, fractional shares, or a robo-advisor. Automate both. Set up auto-pay to savings and auto-invest to your brokerage. Increase over time. As income rises, increase your investments before your lifestyle. Don't chase perfection. Chase progress. This isn't budgeting. This is warfare against financial mediocrity. Meet Amanda and Chris. Both earned $60,000 a year. Both started 2025 with $5,000. Amanda kept her money in a savings account. She was afraid of the market. She liked the safety. Chris built a $2,000 emergency fund and invested the rest in a diversified ETF portfolio. Fast forward 5 years, Amanda's $5,000 became $5,387 with interest. Chris's investment grew to $7,351, despite 2 market dips. He didn't win because of timing, he won because he started. Fear holds your money hostage. Clarity sets it free. The biggest risk isn't losing money, it's never letting it grow. Saving feels good because it's visible. Investing feels scary because it's invisible. You can see your savings balance. You can't see your compounding returns in real time. That's why so many people save too long and invest too late. But here's the uncomfortable truth. You can't save your way to wealth. You have to invest your way there. Your job isn't just to protect your money, it's to deploy it. Strategically, calmly, confidently. Start small. Even $25 a month invested adds up. It's not the amount, it's the habit. Here's what 2025 demands from you. Don't hoard, harness, don't react. Plan. Don't wait for the perfect time, create it. Use tools like high-yield savings apps, Ally, SoFi, or Capital One, beginner-friendly brokerages, Fidelity, Schwab, Robinhood. Auto investing tools, Acorns, M1, Finance, Betterment. Start with simple investments, a total stock market ETF like VTI, or an S&P 500 fund like VOO. Or use a robo-advisor to diversify automatically. And remember, you're not choosing between saving and investing. You're choosing when to do each and why. That's the power of personal finance in this new economy. Strategy greater than sentiment. If you're still unsure whether to save or invest, ask yourself 3 questions. Do I have safety built in? Do I understand the risk I'm taking? Can I leave this money alone for at least 2 to 5 years? If you answer yes, it's time to invest. If not, build your savings muscle first. But whatever you do, don't freeze. Indecision is the thief of opportunity. Marcus Tullius Cicero and your future self. Whether it's $20 or $2,000, the right time to start was yesterday. The second best time, right now. And remember, your financial revolution doesn't begin with a windfall. It begins with a decision. Save to survive, invest to escape. You don't need more money, you need more momentum. Start today.